YouTubers, it is me, Mike Martins. Welcome to the Mike Martins channel. Thanks for joining, guys. We are headed for a housing melt-up. What's a melt-up, you say? Well, I've been discussing this quite a few times on the channel, so I don't want to sound like a parrot. Let's look at the definition of what a melt-up is, and let's look up the articles that we're seeing that correspond to what the definition of a market melt-up is. A melt-up is a dramatic and unexpected improvement in an investment performance of an asset class, and we're basically discussing housing, driven partly by a stampede of investors who don't want to miss out, again, FOMO, on its rise, rather than by fundamental improvements in the economy. Yes, that's a really good definition of a melt-up. So let's get back to what I want to say. Toronto home prices expected to skyrocket in 2020. And this is what we're seeing here, a melt-up in the markets. Most Canadians are completely out of reach from housing. Most Canadians are now becoming out of reach for rent. Rent's going up, insurance is going up, property taxes skyrocketing, and it's definitely pushing more people towards ownership, thinking that maybe if I own, I won't have to throw so much money away towards rent. But then when you rent, you get punished with so much just cost of expending and expenses and cost of keeping or maintaining your asset. Back in the day, you would buy a house for something that you would invest in, lay roots, raise a family, hand it down to your children. Now people are buying them as commodities, just like a trading market now, and that's what's become. Wealthy investors swooping in and outbuying the local Canadian, American, Australian proper, completely bought out of their own markets, born and raised in their own cities, and look what's happening now. So, after a rocky few years of declining home prices and sales amidst government cooling measures, Toronto's real estate market heated up with the vengeance of the latter half of 2019. The Toronto Real Estate Board's most recent figures put price average for a home in the city a whopping $910,000 as of November 30th. That's for both houses and condos. Last year, at the same time, the average Toronto home price was $840,000. So they are going up, but we're seeing a melt-up, guys. That's a sharp increase for just 1 year. And experts say the incline will only get steeper as we move into a new decade. In its freshly released, well, people aren't making more money. Taxes are going up, price of food's going up, the price of fuel's going up, everything, uncertainty in the Middle East, trade tensions with China. You honestly think prices are going to keep sustaining themselves at what they're at when wages, you have like nine to 16 times your average income to get into the housing market now? In these cities, I'm saying? Yeah, it's not going to fly, buddy. It's freshly released. A 2020 housing market predictions report. The Toronto-based real estate brokerage Zoukasa declares that next year will see Canada's housing market continue to recover from its 2016 to 2018 boom-bust cycle. This is already apparent. This was already apparent, but it remains to be seen just how much the market can reheat after a brisk few years. It's no secret that the market conditions in Canada, large cities, have been largely defined as a growing supply and demand gap, explained Zoukasa managing editor Penelope. So here it is. So you got this supply and demand phenomena that's going on all over the Commonwealth. Ireland seeing it. Dublin, Ireland. We covered this on Trends in the Housing Market. We saw it we're seeing it in Australia. We're seeing it all over the place. But they're not gauging the amount of empty homes that are out there, because supply and demand, it only counts when everybody is supplied with the home and they're living in it. We're looking at it as a commodity now, where it's just numbers on a graph. We're not looking at it anymore as housed Canadians that are laying roots and raising families. We're not seeing that anymore. We're seeing more of bidding wars and all this crap that's going on, right? While factors such as foreign and domestic investment have also contributed to the too hot to handle price growth, that there have been already too few homes to set demand, particularly in the GTA markets, set the stage for bidding wars and a stratospheric rise in home levels over the course of 2016. Such government measures as the foreign buyers tax, a tighter mortgage restriction, slowed demand significantly after 2016, but only for a little while. Sales and prices are now rebounding, nearly reaching the kinds of numbers that inspired Ontario's Fair Housing Plan in the first place. This time around, the spike is being attributed to the lack of supply. Again, 110, 120,000 empty homes in Toronto. I mean, that's multiply that by 3 people per house. Yes, you're going to have a supply issue. People are going to be displaced. Back in 70s, 80s, and 90s, you'd never see an empty home. There would always be a family living in it. Always. Not now. Not now. You got empty boulevards. Go to downtown side streets in Vancouver and see how many people live in those homes. Increased competition between buyers was resulted in an acceleration in price growth, said Trebe Chief Market Analyst Jason Mercer earlier this month. Expect the rate of price growth to increase further if we see no relief on the listings supply front. Sukasa points out that the total months of inventory, the length of time it would take to completely sell off all available units of homes just for sale, just hit its lowest level since 2007 of 4.7 months. That's huge, guys. Fortunately for those who do aim to buy over the next year, Zukasa says that mortgage rates are expected to remain cheap. So this is how they're getting it. Cheap, low rates, and expected to do another rate cut. And we're going to probably go into negative territory to keep this friggin' Ponzi scheme going. For what? Fortunately for these, with the average Toronto home now costing triple the average millennial could afford, it likely doesn't matter that much anyway. Wait, triple the average? That's really good if it's triple, because it's a lot more than triple. When you're paying $910,000 and you're paying VIG on that 910, even if interest rates are low, once VIG goes up, you're screwed. Okay, let's move on. So I threw that out there because we're seeing the same phenomena in Australia. We're seeing it all over the Commonwealth. Property Outlook 2020. Australia's property market set to keep rising, but will peter out mid-year, experts say. So this is again from yesterday. I kind of wanted to throw this out there. See, Australian property market looks to keep rising in 2020, experts say, but price gains could peter out mid-year if a new affordability problem emerges. Now, in Australia, people are getting coupons or little tickets or brochures over at the bank so they could go to the food bank to get food for free so they don't fall behind on their mortgage payments. So again, the people that didn't buy into this whole housing madness are still paying for it one way or another, that are not part of this junk are still paying for this. Last year ended with a remarkable high after the fastest turnaround in history, with soaring prices and high clearance sales. Sellers and buyers can expect more of the same for the first 6 months of new year. Again, we go back to Canada, Australia, UK, and New Zealand are competing for rich investors to come in and kind of keep this market going. And Canada's competing big time, opening visa offices abroad to get more foreign investing and foreign capital in the country. The markets will continue to be buoyed by lower interest rates and improved lending conditions, but the state of national economy could slow the pace of gains. Again, 3 rate drops in Australia. Australia might be headed towards negative rates. I said this 2 years ago. There's no way they can keep this going unless they go negative rates, remove cash, digital, and then go ahead and go negative so there won't be a runoff or loss of confidence in the banking system. So here it is. A melt-up is a dramatic and unexpected improvement in an investment performance of an asset class driven partially by a stampede of investors who don't want to miss out on its rise, rather than a fundamental improvements in the economy. I don't see fundamental improvements in any economy in the Commonwealth. Let me know if maybe in your neck of the woods it is, because I'm not seeing anything. Guys, don't forget to subscribe to the channel here. Don't forget to join here, guys. I already got a few people join here. Don't forget to join and support the channel. If you want to pick up a mug or a t-shirt, lots of cool Mike Martin's Mike in the Night stuff and Trends in the Housing Market t-shirts, all designed by me. And don't forget, Trends in the House, Mike in the Night tonight. We're going to be talking about Australia wildfires on Mike in the Night. So please get on tonight. We'll be live 9 p.m. Pacific time. That'll be 4 p.m. Sunday Australia time. And don't forget to fan me if you want to message me, guys. Don't forget to message me on Facebook. You could find my Facebook page up here on the channel. You could send me a direct message if you need to. Go ahead. I post everything here. So if you guys wanna be part of this, please be part of this and message me here. Thanks for watching, guys, and you guys have a great day, and we'll talk soon.